I would imagine that the dealer flow strategy would be more active at different times of the month and the quarter, just as we approach expiries. I guess the gammas light up, the vegas begin to decay more quickly. Things all kind of get more sort of in tighter ranges and more explosive. Is there some kind of weekly and monthly and quarterly kind of seasonality to activity in that strategy, would you say?
Yeah, absolutely. So there's two factors to when dealer flow is more important. Broadly, just backing up from 30,000 feet, if you've been in a trend of some kind, and a trend doesn't mean up or down, it could be vol compression trend, right? Some activity that's been happening in some way or another for some time that leads to profitability in that area and more speculation in that area. That profitability leads to more investment in those types of strategies, right? There's a natural momentum factor to these things, and that's part of what leads to trend. So from 30,000 feet, there's more dealer positioning when there's more kind of trend. And a great easy example of that would have been March 2020 to the peak in Jan of this year. Right, one way uptrend. What do we get? Massive call speculation in tech names and meme names. A lot of index put hedging because people are making money, and there's a lot more concern, and so you get record skews. So you get really concentrated positioning that builds, and builds. And it's our dealer flow is by no means a trend following strategy. It's completely non-correlated. If you look at the 2 years of track record when the market was rallying, we did very well, but non-correlated. And the key there is you have just much more of a predictive edge when that dealer positioning is bigger. It has a bigger play. So more active, more bigger bets, more leverage when that dealer positioning is more meaningful and has more predictive value. That's from 30,000 feet. Now, if you kind of zoom back in on a day-to-day basis, absolutely, as we're approaching periods where dealer positioning matters more broadly near big expirations or when positioning is important, event vols, approaching the Fed or some type of election or something important matters a lot more, much more opportunity, in those environments and much bigger percentage of the flows, during those types of periods. So we definitely have a tendency to be more active and to be more leveraged. And when we know more of the equation, right, and we have a higher conviction that the wave is big and we can hop on that wave and kind of ride it. So there's definitely a time element. It's not as easy as saying, oh, during certain times of the month or certain days of the week. It really is a function of activity and dealer positioning, and those things are correlated with more important activities, or when people are afraid, or there's bigger positioning based on simply out of callables or over-the-counter trades or things that we know that are structured in a certain way.